Thank
My pleasure.
you. Good afternoon, everyone. This is the last week in Mortgage Today. We're going to just give like 30 seconds here to let some additional people roll in, and then I will do introductions and we will get started.
You guys need to look less stiff. Look, smile. There you go.
We're loose as can be.
I didn't realize we're all in black and white here today. It looks like we're.
Looks like you coordinated.
Great.
My Hawaiian shawl. My dress I wear is a shawl.
Is that it wasn't a coordinated effort on the part of the local bank team today?
Not, in fact, I'm embarrassed to say none of us have our local bank shirts on. We that's part of being a new bank. We get to have cool shirts, and mine are all dirty.
Yeah, I don't have mine on today either, and I usually have my TMC logo gear on as well. Well, I think we will get started here. So, oh, Angel Duke is giving you a big shout out
Hey, Angel.
from the audience. Angel, thanks for joining us today. We always appreciate your exclamation points in our commentary. So thanks everyone for joining us. This is the last week in Mortgage Today. I am here today with the great team from Local Bank. And at the helm of that team is Rob Henger. We have Sophia, who happens to be his daughter, by the way, and Ben joining us as well from his team. We thought maybe, we would try to get some insight from people not like Rob and I that have been in the industry for a long period of time.
Some people that are fresh and not jaded and cynical after 30 years in this business.
I did not say that. But,
I did.
So I would love it if you would just do a little introduction of who Local Bank is and your team and what you're doing.
Happy to do it. So first off, hello everybody. Good, always a pleasure to Faith to hang out with you and Amy and Ash and everybody from TMC. So I have the good fortune at being in my mid-50s to start all over again in mortgage banking, right? So after 30 some years, I joined an investment group and we bought a very, very small bank, very small. And we are in the process of standing up the mortgage division in this tiny little bank. This represents about 50% of the mortgage department right here. For a long time, it was just the three of us. But we are having a lot of fun, and the name of the bank is Local Bank. We were People's Bank of Red Level, and considering People's Bank, or considering Red Level has a population of 400 people, we decided that it would probably be okay to rename the bank because we wouldn't upset too many people. So we're having a lot of fun. I mean, this is not a great time in the business, right? The industry's hard. I want to be respectful of that. I know there's a lot of folks that like myself, that banks changed their strategy, and the bank that I worked with for 12 years decided they no longer needed a guy to grow a mortgage if they didn't want to grow a mortgage. So it's a tough time in the business, and what we're really focusing on is just keeping our variable costs as high as we can, our fixed costs as low as we can, and just having fun. Just enjoying the business, enjoying people, and staying focused on it, and the rest seems to work its way through.
And so before we went live, you shared a huge, well, you had shared it over the weekend, but you also shared before we went live, and I want to hear it in your voice, the huge milestone that you guys just after 6 months, 5 months.
Yes. So I was thinking about this in my career. I think I've been involved in somewhere around 250,000 mortgage loans closed. I originated for 20 years and then, ran the shop at First Bank for a long time. And we closed our first loan at Local Bank. So this little bank's 108 years old, never made a 30-year fixed mortgage. It was always just a tiny little community bank. So we closed our first loan, and literally, you've heard the expression, it takes a village to raise a child. It took a village to close a loan. It was a lot of fun. We're on kind of a temporary LOS right now while we work with our primary LOS provider, and it's like duct tape and Band-Aid and WD-40. You just figure out how to do it. But I will tell you, it is probably the most fun loan I've done in my career. It's awesome. So,
Very stressful one for me.
Yeah. Yeah. There'll be more.
Yeah, I think that's fantastic. It's so great. We love, of course, having you in our network, and it's always fun when we can celebrate those things when they do happen. So kudos to you and your team.
Thank you. And Faith, is Planet Home Loans in our network?
They are.
Well, so Planet Home Loans, I'm looking for you to buy that loan. So I closed it. I need you to buy it.
We'll put the word out for you.
There you go.
We'll put the word out for you. Well, I thought that we would start talking today about something that has been in the news a lot and has been a pain point for many people in the industry, which is trigger lead legislation. So, I don't remember how long ago it was, but there was legislation that was submitted initially that kind of blanket elimination of all trigger leads. And just in the last week, HR 4198 was submitted where trigger leads could be utilized, produced, whatever you want to use, whatever word you want to use, in limited circumstances. One of those circumstances being that you had to have consumer consent. I would just love to know from you if you've heard from consumers that that you've worked with, either here or prior, about how heavy a hit they've been getting from trigger leads. And I know in your past, because of the business models you've been involved in, you've been involved with referral sources. So would just love to kind of hear your feedback on that particular topic.
So, I guess at the end of the day, the ability to drive pre-approved credit offer, right? I mean, at the end of the day, what is a trigger lead, right? A trigger lead is a pre-approved credit offer from a creditor to a consumer. And it started with, the credit card world, right? You're pre-approved for a credit card. What we did is we took that and we twisted it a little bit and we said, hey, you're pre-approved for an equity line. Okay, that an equity line is similar to a credit card. And then we twisted a little bit more, and some mortgage people were creative, right? And we twisted that a little bit more, and we extended it to a firm offer of credit for mortgage. And again, if you're a bank and you've got this, this customer base, and you wanted to communicate the people that you believe would be eligible for mortgage, then that's a good use case for it. When you take it a little bit further, and you can probably tell where my tone's going, we take this a little bit further and you say, okay, now it's a pre-approved offer of credit, it's on a mortgage, and the only time we're going to call you is if you just happen to have a credit inquiry an hour ago or yesterday. So are we really empowering the consumer to shop, or are we just banging them on the phone? And you can probably tell by my tone where I am with it. And I operated in the consumer direct space for 7-8 years very successfully, and we never went there. Now, again, I'm not passing judgment on anybody. You got to do what you got to do, but we felt like, I guess as a business strategy, my thoughts are, if you're heavy into the trigger lead channel, trigger lead sales, you got like a 50-50 shot, right? So if somebody locks on Monday and rates go down on Tuesday, then then your offering may be good. If rates go up, it's not. That's a tough way to run a business. And I don't think anybody would probably say that needs to be the core premise of how I'm going to be in the mortgage business. Now, if you think about the last couple of years, we're all fighting for business. We're fighting for everything. And I guess, when your back's up against the wall, you got to do what you got to do. I personally would love to see, I haven't read it. I'm going to read it whenever we're done, but I'd love to see a world where if the consumer has to opt in for that, wonderful. And that mitigates a lot of trigger leads and a lot of uncomfortable conversations, right? Because at the same token, there's two sides of that coin, right? Somebody's fighting for a loan. Somebody got a loan, locked it, has a hedge cost, and now is about to lose it, right? So I'd say let's keep the industry clean, keep it simple, and not cannibalize each other.
And it does appear, based on what I read related to the new legislation, that that's exactly what it does. It puts it more back in the hands of the consumer. It's not just because a credit pull has, or credit inquiry has been done. That doesn't get blasted out to the 100 banks, mortgage lenders that paid for whatever lead source that they got that referral from. So I think a lot of people in our network believe the exact same thing that you do. I always like to pull one like kind of random article when I'm prepping for these that, kind of like maybe people haven't heard of. There was one this week that it actually was from a banking source that I read, and the article is called One House Forever. And the concept of the gentleman that wrote this article was that it would be wonderful if the first home you bought was the last home that you bought, and you planned when you built this house for it to be potentially multi-generational, expand when you had children, be able to not contract but repurpose room usage, as your family maybe moves on and moves out. And I just thought it was, honestly, from my perspective, someone who's lived, in 3 different homes in the last 5 years, I thought it was a very, very unusual thought process for someone, and not necessarily conducive to work in our industry, because if people stayed in the same house time over time, like business isn't there. I would just love to get your take on, do you think that people would ever want to live in one house forever?
Well, I'm gonna toss this to these two because their perspective is probably a little different. But so for everybody's benefit, Faith sent me the article ahead of time, and it was just it was somebody in the housing business who was basically promoting like she explained it, promoting, if you're going to make the biggest investment in your life, do so for life planning, right? Whether your mother-in-law comes and lives with you, whether you're aging and you're maybe in a wheelchair. So it gave a lot. I'm going to hold my opinion, but I'm going to ask Ben first here. So Ben, if neither of these two, by the way, have purchased a home. So it's
Feedback
good.
then.
Yeah,
Yeah, absolutely.
Good case study. So Ben, if you were out to, he's in Birmingham, Alabama. So if you were out to buy a house, would you consider buying a house that was wheelchair accessible, enough room for your mother-in-law, and features of that nature? Is that going to be hot on your list of wants and needs when you're buying a house?
All right, here's the deal. Logically, I would love that. That would be awesome. If all of my potential future issues are, handled up front, great. But there's absolutely no way I can afford that. Just period. To plan for a house that I am comfortable living in 10 years down the line, where hopefully career-wise I'm in a better spot too. Those desires are probably way higher than what I could afford right now. And logistically, if we're expanding a house, I need a pretty darn good plot of land too. If we're thinking legit, he said expand the house, I better get a big plot of land. So if I could afford it, if it was there, I still probably wouldn't think I'm going to put in a wheelchair ramp if I don't need one right now.
Yeah.
But if it's there, hey, great, I'm ready.
You ride your skateboard down it.
That's right.
Wheelchair ramp, skateboard, whatever.
I'll just list it for rent next month. We're good.
Mia, how high is that a priority for you? Would you buy one house and stay in it for the rest of your life?
If I went into buying a house with the thought that this is going to be the house for the rest of my life, I think that I would feel limited in my life options. I would feel that I had to stay, like, let's say I got a new job and it was for a different location. Well, I had put so much thought into planning this one house to stay in the rest of my life. I feel like that would sway some of my decisions.
There's a lot so my wife and her mama is a wonderful person. Could you imagine if we told Tiffany, hey, you have to buy one house that's going to be the one house you have for the rest of your life? That would put her into so much stress and anxiety. We'd never buy it.
No, you wouldn't find it.
Yeah. So I think I will chalk that up, Faith, to one of those wonderful ideas that looks good on a whiteboard. Not so practical.
I thought too, the other thing that I thought about, and of course I'm in the Minneapolis market, but where would you find a build? You would have to be working with a custom builder. Yeah. The land issue, Ben, I think is like totally a valid issue. When you're in the city, you don't have a lot of expansion. And then are codes within the city that you live in going to allow you to even do what you maybe would want to do down the road? So there were all those things that I instantly thought about, along with, I don't know about Tiffany, or Sophia there, but my taste changes dramatically
Yeah.
from, I mean, 10 years down the road, I could be wanting to live in something different. It would be great for our renovation lenders because I would have to think if people adopted that concept, you would be continually kind of modifying and changing things. But I just thought it was kind of
Of course,
interesting.
Faith, when you get to our age, you've been around long enough, the colors and styles just come back. So, I mean, heck, I'm waiting for travertine to come back in style. And I think I still have some hunter green and some crimson somewhere in the house that, will come back someday too.
The first thing my mind goes to is shag carpet.
Oh,
And so I'm a little bit older than you are. So that's where my mind just went. Fannie Mae came out with some selling guide changes this week, more lenient underwriting requirements on certain loans. And all of them, obviously the focus has been first-time home buyer, more affordable lending. So these made a lot of sense to me. Would love to hear if they also do to you. Limited cash out refinances where loan proceeds can be used to pay off the existing first mortgage, which wasn't that way. If there's a shared appreciation agreement or a community seconds loan.
Faith, back up a second. I'm not sure I even understood the first one.
Limited cash out refinances where loan proceeds can be used to pay off the existing first mortgage. So these are Fannie's new guidelines, and they didn't note in the article a product that applied to, so that may be product specific where it's not allowed right now.
Gotcha.
The second one was shared appreciation agreements and a community second loan that proceeds can be used to satisfy any share of the appreciation agreement. I have never worked on one of those loans, so I do not have good perspective on that. So if you do, please share.
Let's break that apart for a second. So if so you'd refinance and you're buying out of a share, give it.
No, you're just refinancing your loan and you have a community second loan.
Okay.
And apparently there's some sort of shared appreciation agreement that then the proceeds could be used and apply towards that share of appreciation.
That's a pretty deep use case. I know when we were in Nashville, there were certain areas that were, you're gentrifying, right? And you're trying to protect the affordability of housing. So you had some shared equity programs in there. But I don't recall ever refinancing one. I'm trying to think of logistically, if you're, if you think about it, at the end of the day, the shared equity program is there to kind of cap the return on investment, so to speak, right? So if you buy a house for 200,000, it's now worth 300,000, good for you. But the next guy has to pay 300, the next guy 400, right? So you're trying to cap that, and I guess in refinancing, you're able to, maybe that's the deal is if you have a shared equity program, you're stuck on a refinance, or you maybe can't refinance, so they're able to enabling that. So,
Yep, Angel gave us some shared perspective on that too, that a shared appreciation could be a community land trust as well. So adjustable rate mortgages qualifying at the note rate at the time of origination.
That's cool.
Thought that was, as
the only downside is, let's think about that for a second. The note rate on ARMs are almost higher than the damn 30-year fixed. So what goods that do anyways, right? So that's like a gimme rule, right? They'll take that one away someday when rates go down.
I'm thinking like they're thinking planning down the road when things adjust a little bit. But you're right, that could be taken away if that happens as well. And then temporary interest rate buy downs on manufactured homes. As well. So obviously,
I guess what that tells us is the manufactured home industry is now getting so expensive too. So.
It makes you wonder, doesn't it? Makes you wonder. But I thought that at least they're trying to think of creative ways. Whether any of those one item, when I looked at all of those, I thought, I wonder how much of a segment of the industry this really is, and what kind of an impact could it have, or does it become more of a this looks good, it looks like we're making changes, and there's a small percentage of people that would be impacted by that. But because I'm not directly in the lending space right now, I don't have the best feel for that, but it kind of sounds like you
Let me say it this way. In the very near future, we will be applying for Fannie and Freddie Seller Servicer. So I like my friends at Fannie and Freddie, and I think you're doing a wonderful job. Thank you very much.
I like them too. I like them too. And I do feel like after our exposure to them, I've said this before, and I'm sure I'll say it again. I do feel like they're listening and they're trying to make things better and trying to do things that are logical and do make it easier for people. I think that when you slice and dice it down so far, sometimes though, it doesn't have a huge impact because it impacts such a
But
small.
you know what's something though really cool on a high level and totally off topic, sorry, is in 2 weeks, FHFA is hosting a kind of what they're calling a tech velocity study. And I got asked to attend. And what's pretty cool about it is it's just basically at the high level saying, why do loans continue to get more expensive and more expensive and more expensive? Why is it $13,000 to manufacture a loan? We're in a world where we've implemented technology, day one certainty. Why isn't it coming down? And it's pretty cool to think about your regulator thinking at it at that high level, bringing some people into town, into DC and go and breaking up into focus groups and dare to dream, right? What do you do with the data? How do you make the data more accessible? How do you make it easier to manufacture loans? So it is good to see the industry listening to what our constituents, what our consumers, what our homeowners need.
Yeah. And Aaron D, thanks for popping in the chat, Aaron. The denominator has also gotten smaller, less loans over fixed costs that are hard to eliminate and still run a company. Yep. So true. We do have some people within the TMC family, including our own Tom Gallucci in Washington, DC for that. So we'll have to connect you with others.
Tom's going to be there?
Tom is going to be there as well. I believe Jody Hall is going to be there from Nationwide as well. So happy to see that happening with I can't remember the latest number of cost to originate over. Did it go right over 13?
I think so, yeah.
That's what it was. It was in the 12s, but I think it went over 13 the last time I saw it published. The other thing that I thought was interesting in the news this week is Maxine Waters, so Representative Maxine Waters from California, introduced a package of 3 bills last Wednesday, aiming at narrowing the racial wealth gap, as well as trying to combat homelessness. Now, about 171,000 people that are living on the streets and are in shelters, which is 30% of that population are in California. So obviously California has a vested interest in that. I'm sure it's like we see people in the summer here, but they move in the winter. So I'm sure with California having the lovely weather that everyone that lives there pays for, it becomes more attractive to be at least in an environment of warmth. Yeah. $100 billion in direct assistance for first-time homebuyers, more than $150 billion in fair and affordable housing investments, and an expansion of the housing voucher program, which is commonly known as Section 8. I guess that's probably how I've heard of it, into a federal entitlement that's accessible to every American family that qualifies. I would assume you, like others in our network, anything that can be done to help those populations and give them a leg up, you would be pro for. Don't have a lot of details on those bills. I would anticipate that we would hear more as things kind of move forward and they get hashed out amongst people. So anything that I guess you are seeing in the market that you're in, that people are doing that are creative, that kind of are trying to address some of those similar issues, because I know it's not just California, obviously.
Yeah. Well, I think I'm here in Birmingham, Alabama, right? So we're about as conservative and slow as it gets, right? A little kind of the opposite of California, no disrespect. But I think at the end of the day, anything we can do to help people that are underserved, that are, you know, experiencing hardship in life is a wonderful, is what we should do, right? I mean, that this industry is fun, it's creative, it's difficult, it's driving to drink, all the above. But at the end of the day, we are blessed that we get to participate in something that is truly meaningful in life, right? I mean, you know, being involved in putting a roof over somebody's head is pretty special. And if we decouple that, then we just become, you know, widget manufacturers, right? I mean, we're just manufacturing widgets, send it out to Wall Street, sell it. So I think it's important to connect, help people, care about humanity. Those are things that are important. Now, I will say, just on a just personal belief, I'm a little worried that we have a legacy structure, right? So Fannie, Freddie, their covenants require a down payment, right? I mean, I'm not advocating we do what we did in 2005, 6, and 7, right? But to some degree, if we're requiring a 3% down payment, we want to do that so somebody has skin in the game. Makes all the sense in the world. But we're now starting to give that, you know, that 3% to someone. So are we, should we maybe look at the foundational guideline of, you know, how do we keep people committed to the mortgage? How do we keep sustainable homeownership? And is that down payment, is that going to be a requirement? And if you give them the money, is that going to work? Right. So I don't know. I'm working on a project right now called American Pledge. And it's what we call a down payment substitute. So it's trying to help banks make CRA and fair lending loans, portfolio loans, but backstop them with an escrow, a 5% escrow. So if it's $200,000 house, there's a 10, instead of giving somebody, you know, that down payment money, finance the whole thing, but then put a nonprofit like escrow behind it. And when the homeowner falls upon hard times, roof leaks, or they lose their job, then you have funds or money there to keep them in the house. And is that a viable alternative? Is that a sustainable, affordable homeownership plan? So tune in next year and I'll let you know if that works.
Yeah, I was going to say that's great as perspective. I think that it is good that people have some sort of ownership of it themselves and a skin in the game, because if you don't, it's so much easier to walk away from something.
Well, you know, and I can't speak for national numbers, but I can tell you in my life, our biggest foreclosure exposure, our highest true foreclosure were on bond loans, right? Where you had a 96.5% first mortgage, and then you got a down payment assistance or gift for the second, and those folks didn't have skin in the game. So it makes sense that you give skin in the game, but when you give it to them, is that gonna, you know? So I don't know.
It'll be interesting to see kind of how some of these things all play out. I did think, though, there was a quote that was in this article that I did appreciate her being very upfront and sharing, which was housing should be our #1 priority. Every member of Congress has not one, but two decent places to live, one in Washington, D.C. and one in your home district. And then the last thing that she said is, we cannot continue to claim we're the greatest nation on earth with people living on the street and without their basic needs being taken care of. So I thought it was pretty bold of her.
Yeah.
And I love that about people when they feel like they can do that. So I thought it was pretty bold of her to kind of come out with that statement. It definitely caught my attention that she would vocalize that. So I thought that was very, very interesting.
Well, I think regardless of your political preferences or agenda, be thankful and be, you know, we live in a great country that we can speak our agenda. We can do, you know, we can give our opinions, and not suffer persecution. But maybe some persecution to it. But for the most part, we're all blessed, and we need to remember that every day.
Yep, I agree with you completely. Can't believe it, but we are at the bottom of the hour. Ben and Sophia, we look forward to seeing you in our Young Professionals group. Thank you so much for joining us today. We will tap into you down the road as we need that new, fresh perspective on things, but appreciate you joining us today, Rob. It is always our pleasure to have you with us.
Thank you, Faith.
get your opinion on topics. So thank you for doing this with us today.
Always enjoy it. I appreciate the time, and thank you for doing this.
Yeah, have a great rest of your week, everyone. And join us, for those on the call, join us next week at the same time for the last week in Mortgage Today. We would love having you join us live. Thanks so much. Bye, everyone.